Most people look at these and they see a childhood hobby. But when we look at them, we see a $50,000 asset class that's currently outperforming our stock portfolio.
In just 2 years, our Lego collection has appreciated by 35%. While the markets were volatile, these bricks stayed steady.
So today we're going to pull back the curtain on why Lego is a serious cornerstone of our investment strategy and how you can start diversifying too.
Welcome back, everyone. If you've been following our journey toward financial independence, you know we're obsessed with one thing: diversification. We've always believed that you shouldn't just rely on a single index fund to carry you through retirement.
Exactly. And for a long time, alternative investments meant things like gold, silver, or real estate. But in 2026, the landscape has really changed. We're seeing a massive rise in what the industry calls adult fan market. The adult fan market. I didn't even know what that was. Did you?
No.
So what this is these are adults that have high disposable income who are buying back their childhood, the items they loved forever, which I can kind of relate to that as I'm saying it. Not to play with them, but to display them and to hold them as investments.
Currently, we have about $50,000 worth of sealed, new in-box inventory sitting right in our storage unit. Over the last 2 years, that portfolio has grown in value by 35%. To put that in context, the stock market's historical average is about a 10% gain every year. We've managed to triple that growth while holding a physical asset.
In this video, we're going to do a deep dive. We're going to explain the retirement pop, which is the secret sauce to the growth here, and how we manage the logistics of a $50,000 inventory, and how we use the margin of safety to make sure we almost never lose money on a single set. Let's start with the core mechanics of this whole business, the retirement pop. In the stock market, a company can always issue more shares, but in the Lego world, there's a hard ceiling on supply.
Every year, Lego retires about 20 to 30% of their catalog. Once a set is marked as retired, the factory machines stop. It will never be manufactured again. The supply is locked forever.
So this is where the pop happens. As soon as those set leaves the shelves of major retailers like Target and Amazon, the only place to get one of these is on the secondary market from people like us. Because the supply is now fixed, but the demand from collectors continues to grow, the price goes up. Often it goes up very quickly after that initial retirement.
We've seen sets that retail for $100 jump to $150 or $180 with just in 12 months of retiring. That's a 50 to 80% return on investment in a very, very short window. But the trick isn't just buying any set. It's buying the ones that adults want to display.
So we focus on investment grade sets specifically. These are high complexity models like the Star Wars Ultimate Collectors series. We actually just bought the Millennium Falcon recently, so we're kind of excited about that.
Yeah.
The modular buildings or the Lego Ideas line, those are the ones that we focus on.
Or even like this guy back here.
Oh yeah,
the Rivendell.
For all the Lord of the Rings sets seem to do really well, like Rivendell,
Yeah.
and then also, what was the Zelda?
The new Zelda ones, because they're unique. You'll find out, we'll talk about that a little bit more, but
Yeah.
there's definitely different sets that do very well.
And these aren't being bought for 5-year-olds to play with on the floor, even though they would really like to do that. They're being bought for centerpieces for offices and in living rooms. So people are setting these up to look at them and have them as a display piece for people to look at. The adult demand is really what drives that pop higher than your average toy.
Now you might be thinking, 35% growth sounds great, but what about the risk? That's where our professional background in project management, or Jared's, comes in. We use a concept called the margin of safety. And if you've heard us talk about our stock portfolio, Jared has definitely focused on the margin of safety in that realm. And so we've kind of like transitioned that into our Lego investments too.
Yeah, and we get that a lot from Warren Buffett, so that wasn't my idea, but I try to learn from him. And as you guys probably also know, we do hate to overpay for anything. That definitely includes our investment portfolio, some of the individual stocks that we invest in. So we rarely buy one of these sets at full price, and that's what a lot of these collectors and resellers do. So we wait for the sales, we stack credit card cash rewards, and we maximize the gift with purchase promotions that Lego does, and then usually Amazon and Target will match that. So if we can buy a set for $200, effectively for $160 with all those different discounts, the funny thing is you've already made a 25% profit before the set even retires.
Yeah, and I think on another note is like you have May the 4th and you have different times of the year that are very particular for Legos. And so we kind of follow those trends too to find the sales and to find the discounts, because
That's a good point.
there are definitely certain sets that go on sale only one time a year, or maybe it's at Christmas, or like you said, May the 4th, all the Star Wars sets. And then you get definitely bonus points.
They also have on Lego.com specifically, they have like, I think it's maybe 3 or 4 times a year, they do like the 2 times reward points. And then I think there's even sometimes there's 3 and 4, but sometimes those are on certain sets. But I think the 2 times happen several times throughout the year. And then you double up the points, and that's like every Lego set that you buy, you get those points. And then in your next purchase, you can use those points. And I think all that stuff amounts to being like, what is it, 5 to 10% off, maybe more.
But it's still, it's definitely a discount. So when that pop happens, you've already made that and the pop.
Yep.
So this is why our growth is so high. We aren't just waiting for the market to go up. We're winning on the buy. By entering our positions at 20% below MSRP, we protect our $50,000 capital. Even if that market stays flat, we're still in the green because we bought it at that discount.
Now let's talk about long-term annual growth. This is kind of the other side of that after the pop happens. While a pop happens right after retirement, these sets often continue to grow at a 10 to 15% annual return for several years. And that's what really caught our attention in the beginning, to think about, like, this is something kind of fun to do, something that I grew up getting, like a big Lego set every year with my grandmother. But then to think that you could get a 10 to 15% return and not all the risk and volatility of the stocks, that's really what attracted me to this. And then I kind of brought Amber on board as something else to do. And it is nice to be able to see those sets, like tangible things that you bought with your money versus just seeing it in an IRA account and just being able to see it on like a digital dashboard kind of thing. Sometimes you wonder if that money's really real, but at least we can see these sets and we know that they are real. And the kids get to see us do that too, whereas it's a little harder for them to follow our stock portfolio and some of the digital types of things that we do.
And we can kind of control these. So we control them by like what they look like, how we protect them, that sale, that discount that we get, where we buy it, which ones we buy. So there's a little bit, I mean, it's not completely controlled, but it is somewhat controlled.
Yeah, and I think we can add a little competitive advantage ourselves by doing a really good job. And like Amber said, one of the things that we do is we track all of this information on a spreadsheet that we set up, and we measure the price per piece, historical theme performance. We have a lot of that information behind the scenes, and there was a good amount of research that we did before we got started on this, just so that we kind of had a better idea of what we were doing. And then unfortunately we learned some of the things the hard way along the way, that we bought some sets that we probably wish we hadn't, and we kind of learned on like where the sweet spot is and some of the price points. So some of the other things we track on the spreadsheet are like the market sentiment, to show how many people are interested on these sets, and you can get that information from Amazon and several other sources to see what people's thoughts are on the sets, if they like them, if they don't like them. And so we treat this exactly like we treat our stock portfolio, with data and not emotion.
Yeah, and then we use
Brick economy.
Brick economy, thank you. that helps us. It's not perfect, but it allows us to see the retirement pop and then the annual growth, and then it allows us to see you have exclusivity with things. So there's a lot more that goes into it, and instead of just saying like, hey, I'm gonna go buy a Lego set today. There's like a lot of strategic buying and strategic planning that goes into why we buy the sets that we do.
And it has a lot of projections on what similar sets like those have done in the past, and then what that retirement pop would be and the annual growth. The other thing I like is you can put in all of your sets that you have, and it will create sort of a portfolio for you, and then it will track that for you over time. So it will show what your return is. It's actually a lot like managing a portfolio in the stock market. Brick economy though does a really good job at that.
Yep. So you might be wondering where we put $50,000 worth of boxes. In Charleston, space is definitely a premium and pretty much anywhere. And we've had to be very strategic about our storage.
This is the active part of the investment where we actually have to do some physical work. Unlike a stock, you have to protect the physical asset. And this is something that we're really trying to do a good job of, to make sure that the ones that we sell are in really good condition. And you guys would be surprised. We bought a lot of these on Lego in particular, Amazon and Target. And we've actually received a lot from Lego in particular that are damaged. We've had some that have
like
parts like
coming through the box.
Yeah, coming through the box. I don't know if that's happening. It seems like some of it's happening maybe in shipping, and then some is just a really bad condition on the Lego side, and then they just go ahead and ship that. So we've had to return a lot and be pretty particular about our quality control. So once we have these really nice boxes in great condition, we want to keep them that way. And that is kind of difficult, if a box gets a crease or a ding or a rip, and that value could easily drop to 20%, which is, I think it's just really a shame when we go through all the effort to do the quality control up front to have that get damaged.
Yeah, and I think that's something interesting to also know is that like these boxes are very important to the actual asset and like what it's worth, and knowing that any kind of damage to it, like you said, could cause some sort of discount that someone would want versus having a perfect conditioned box. So that's been our focus lately with kind of putting these, making sure that they're going to last for 3 years. They're going to be sitting in storage, so they have to be protected.
Some of these, going to what, like adding on to what Amber said, sometimes you'll see boxes on eBay, just the box, not even the set. They could be selling for over $100 depending on the set, because people know that maybe if you have that set or it's used, if you sell it with the box, it will resell for that much more. So there is actual value, especially if it's a valuable kind of rare set, to have that box in great condition. That is like real value.
Yeah, which it's cardboard, but it's valuable.
I know.
So we keep everything in a climate-controlled, smoke-free environment. We use heavy-duty shelving to prevent kind of that crush weight on the bottom of the boxes, and our shelves have solid bottoms, so there's no potential for creases on them. It's definitely a logistics operation. We've also had to think about liquidity, so selling $5,000 worth of Lego isn't as fast as clicking a sell button on E-Trade.
Yeah, and that is one of the benefits of being early retirees. We can afford to wait, and we can afford to be patient and wait for that investment to mature and to become rare in the market. And so we're not just selling with all the other resellers or selling at the time that Lego and Amazon and Target have plenty of stock. That just wouldn't make a lot of sense for us. So because we aren't forced to sell, we can wait until the peak of the market for those particular sets. So we control the exit, which is pretty cool. We also use this as a learning tool for our kids. They see us managing the inventory, they see us tracking the shipping costs, talking about it, planning our next purchases, and understanding that the value comes from the scarcity and the condition that the box is in.
A big part of our FIRE journey, Financial Independence Retire Early, is about sleeping well at night. If the stock market has a bad month, it's comforting to know that our physical assets haven't moved an inch.
This is called non-correlation. The price of a retired Lego Porsche doesn't usually care what the Federal Reserve did for interest rates that morning. It cares about how many Porsche fans want a set like that on their shelf. By having a portion of our net worth in collectibles, we've built a third pillar of income that's independent of Wall Street.
It's also about having a business we enjoy. We get to research the sets, follow the trends, and be a part of a community. It makes the work part of retirement feel like a high-stakes game that we happen to be very good at.
If you're looking at your portfolio and it feels a little bit too one-dimensional, maybe it's time to start looking at alternative assets. You don't need to start with $50,000 like we did on this Lego investment. You can start with $100 and one retiring set.
And the good part about us too with that, we didn't start with 50.
No.
We worked our way up to it, and it's been a process of 3 years adding to this. Each and every year we continue to add and find the perfect secret sauce that works for us and that works for our portfolio. So the key is to do your homework. Look for themes that adults love. Buy them at a discount like we talked about, and have patience to let them retire. I think that's the key also, is that you have to have patience.
Yeah, definitely.
And I know some of you are probably also thinking, how do your kids have patience with those sitting on shelves? They're like being in your possession. Somehow our kids are they just know not to mess with them. They've been in our house before we put them in the storage unit. You guys saw them on previous videos where we were sitting in front of them. So they were in a room on a shelf, and somehow the kids never messed with them.
However, I can tell that sometimes I'll go in there and I'll see it almost looks like somebody just went like this and just touched them a little bit. And I think it's our little one, Sullivan. And I can tell that he's definitely been tempted. And he just kind of looks at him and touches him just a little bit.
But they never came off the shelf, and they never were opened.
I know, I'm shocked. I thought for sure we'd have at least one or two that they would have just busted into.
Yeah, so somehow, and I think our older ones tend to, they respect them. I think you've taught them the respect that they needed for the box.
Yeah, I agree.
And for the set. So we'll be sharing our 2026 watch list soon, so you can see exactly which sets we're trying to put our money into. And we'll talk about this throughout the year as we see opportunities and share them with you guys, so that if this is something that you want to add to your portfolio, you can definitely come along with us on that.
And remember, diversification is the key to staying retired. There's nothing more frustrating than picking like really good individual companies in the stock market, or having different index funds and different ETFs. And you know, when there's a bear market or when the market's going down, it really doesn't matter how good those companies are, they're all going down. And they're probably going to go down for a while. And when that happens, it just kind of stinks, honestly, for retirement. Hopefully you have enough cash to get you through that point, so it doesn't really impact you as much. But it would be nice to have things that are independent, non-correlated to that stock market, so that when those bear markets and those big drops come, that you have something else that's holding you up. So thank you guys so much for letting us share our plastic gold with you today. So if you found this helpful, hit that subscribe button and the like button. Let us know in the comments below, what's the most unique investment in your portfolio?
So thanks for watching, guys. We'll see you in the next one.
Bye, guys.